afternoon, everybody, and a very, very warm welcome to each and every one of you to the fourth and final installment of Semafor's Next 3 Billion on Tour event series. We're honored to have you here in Nairobi and to be convening alongside the Kenya International Investment Conference that starts tomorrow here in Nairobi. My name is Guillaume Doan. I'm the Senior Director of Strategic Partnerships for the Middle East and Africa at Semafor, the world's fastest growing news organization. Today's event anchors a conversation that Semafor has championed around Africa on the forces that drive financial inclusion at the intersection of long-term capital, policy, and financial infrastructure. For those of you who don't know Semafor, we're a news organization with 1 million subscribers and bureaus in Sub-Saharan Africa, the US, the UK, and the Middle East. Our founding mission remains the same. We aim to provide our audience of global leaders with the most trusted news source in the world that bridges ideological and geographic lines. Our coverage of Africa is central to that mission. Semafor was created by Africans, for Africans, with a team of local journalists who draw on their extensive experience and contacts to break the kind of news that only comes with being on the ground and understanding the nuances of the continent. Today, we're very pleased to host all of you here for an editorially-led discussion about digital finance and the role that it plays in transforming how people save, how they spend, how they transact. In the last 15 years, access to traditional banking services has improved substantially. Bank account ownership has increased by 2 billion people, and most of that progress has taken place here in Africa. This progress is very promising as more people are connected to financial systems and break cycles of poverty. But still, 1 in 5 people across the planet remain excluded. There is a stark regional divide, a gender divide, and a digital divide that must be bridged. The 2025 Global Findex data underscores persistent disparities in account usage, credit access, and digital affordability, particularly for women, small businesses, rural communities, and lower income populations. Today's event brings together institutional investors, policymakers, foundations, and financial infrastructure leaders to examine how East Africa can move from experimentation to scale. The discussion will focus on where aligned action across capital, regulation, and digital financial infrastructure can most effectively accelerate financial inclusion and position the region as a credible destination for long-term investment. I want to take a brief moment to remind everyone that quality, independent journalism requires the support of great brands and supporters and partners. A big, big thank you to the Gates Foundation for their funding support of this series. A huge thank you to our partners at Invest Kenya, at KCB Bank, and Arise IIP also for their support. To kick off today's program, I would like to welcome to our stage Semafor Africa's editor, Yinka Adekoke, for our first fireside chat in conversation with Abubakar Hassan Abubakar, who is the permanent secretary at the Ministry of Trade and Industry of Kenya.
Hello, everyone. Thank you for being here. We are excited to be in Nairobi, as Guillaume was just saying. We've had the Next 3 Billion event move from Abuja in Nigeria to Johannesburg, South Africa, to Abu Dhabi, and now we're here in Nairobi. And this conversation we're having here, this is probably almost like the ground zero for a lot of what really inspired us to having these conversations in the first place, for pulling people together. But none of this kind of works without, just sort of understanding the landscape as to why certain countries are really where a lot of the energy starts from. So I wanted to talk with you, Mr. Permanent Secretary, and I want to say, first of all, thank you very much for being here. I know it was a last-minute thing, and you very kindly stepped up to, to take part in this. And I really want to take an opportunity for us to kind of position where Kenya is in sort of the sort of the global framework, how we think about the opportunities of investment here, which is kind of how all of this works in the first place. Can you perhaps start by sort of laying out why Kenya now? Why should global investors be thinking about bringing their finance here, bringing their opportunities here? Why this moment, given everything that is happening in the world?
All right.
I think your mic works.
Okay. All right. When President Ruto took over office, his focus on diplomatic focus has been on economic and commercial diplomacy. And for the last 3 years, he has been strengthening that so that we can deepen and broaden our investment and trade relationship with the foreign countries. To an extent that for the last 3 years in a row, we have been receiving good global rating. Like in 2024, the FDI intelligence ranked Kenya #1 in Africa in terms of the country with the largest investment momentum. In 2025, the IMD Global Competitive Ranking ranked Kenya #1 in Africa in terms of competitiveness. Just this 2026, the Business Insider Africa has rated Kenya #2 in terms of where to do business.
Okay.
So as a result of that, and I've forgotten the third one, the Africa Big Deals, the African Investment Report, has rated Kenya #1 3 times in a row in terms of startup funding, right? So as a result of that, we wanted now this global community to come to Kenya, to experience the real Kenya. And that is why from tomorrow to 2027, we will be having a Kenya International Investment Conference, where it will be a platform for us to present the unique value proposition of this country and showcase what are the investor-ready and investment-grade opportunities for the investment community to explore and exploit. And one of our unique value proposition that we are proud of is because we see our philosophy is we are investor-centric. So we go by what are the investors' needs and wants. So before the investors invest in any country, they are mainly focusing or interested in the macroeconomic environment of that country.
Right.
So what the President Ruto has done for the last 3 years, now we have a stable exchange rate. We have a low inflation regime, and that is what investors are looking for. We have a low interest rate regime. If you can look at the CBK rate, they're just going down. We have stable forex reserves. So from the macroeconomic point of view, we believe we are ready for those investments. And the next value proposition that we believe that we are unique is on policy and regulatory predictability. Most investors are concerned on instability of the tax environment. Under the leadership of President Ruto, we now have a tax policy approved by Cabinet and Parliament, starting from 2025, that will take like 3 to 5 years before tax rates can be comprehensively reviewed. The third value that we believe we want to showcase out there is a competitive business environment, because we believe that the opportunities that exist here in Kenya, we as government, we have properly incentivized them and de-risked them. And our incentive regimes are threefold. We have general incentives in different kind of opportunities, but we also have specialized incentives in our special economic zones and our extra processing zone. We have incentivized economic zones which help investors to produce competitively so that they can be able to sell their product. But most importantly, we have a customized tax incentive that if you invest with a certain amount, like 10 billion and above, we can even agree bilaterally. The framework is called Special Operating Tax Framework that we can agree. And we did this with Moderna, the US company in the pharmaceutical space. So we believe we have the incentive framework necessary or adequate to attract the necessary investment. But most importantly, if you be able to produce competitively, people will be asking, where am I going to sell?
Right.
So the market access for Kenya, if you set up in Kenya. We now, if you set up and produce in Kenya, you can able to access almost half of the global GDP. Just yesterday, and I'm told today, we are signing another trade agreement with China. So we will be able to access China, which is 1.4 billion people, almost $20 trillion market, duty-free, quota-free. So it's the market access that you have, the US, the UK, the European Union, the UAE, and now the China market.
Okay. I mean, as we look at this time in history, and given everything that is happening in the world, a lot of investment that's been coming into the continent over the last decade has been coming from the Gulf regions, right? A lot of the new investment, and Kenya is no different. There are lots of great opportunities and great sort of investments. How do you see this moment where there's every chance that Gulf nations will pull back a bit as they consider their own situation themselves? Is that in your thoughts within the government, with the general sort of policy thinking about where investment is coming from?
Yeah, I don't think they will pull back. I'm still bullish.
You're still very positive about that?
Continue to invest in. And for any crisis, there is a silver lining. For example, in terms of our infrastructure in Kenya, we have two major ports. One is in Port of Mombasa, another one is in Port of Lamu, which was not properly or adequately utilized. Okay. But with these crises, we're not saying the crisis should continue, but now we are seeing a lot of activities because of the ships are docking there for transshipment on goods that are meant to go to that route. But we know that it will affect our trade, for example, what we are producing and selling to the Gulf a little bit. But that is why the president is trying to mitigate this by diversifying our market. Yeah, we should not only concentrate on one market. That's why we are diversifying to China and the other places so that we can be able to mitigate such risk when they occur.
What is the sort of the Pan-African opportunity here for Kenya in this moment? Because, Kenya does not just exist on its own. It exists within this continent where we face many challenges, but clearly those challenges are also opportunities for the various countries. Well, specifically here for Kenya, where do you see the opportunities going forward in terms of, more Pan-African trade? We talk a lot about the African Continental Free Trade Agreement. It's still yet to be fully implemented. But how do you see this moment for Kenya now, as you think about that diversification of opportunities?
Yes, in the African setup, we believe that there's a lot of opportunities when there's a lot of integration, right? Integration, and then after integrating, we need to improve on connectivity so that we can be able to reach all these. So currently, we are a member of the East African community. We are also a member of COMESA, which is 21 countries in Africa. We are also a member of the Tripartite Free Trade Area, which is East African community. We have the COMESA and the SADC. But we know that it exists now, the framework over the FSFTA, which as a country, what we are doing, we are positioning Kenya as an entry, a hub and a gateway to the rest of Africa in terms of trade and investment. So there's a lot of opportunities there on that 1.4 billion people and 3.7 trillion market. We think that we can really leverage on that.
Are there any sectors in particular that you think have the strongest opportunities?
We have sectors, and they are aligned to the African priorities. We have priorities which are aligned, and our priorities are spelled out in President Ruto's economic transformation agenda. They are along 5 key pillars. Right. The first one is agricultural transformation, where we want to attract investment, especially in agri-food and non-food. For example, in this country, we are importing almost $4 billion in our import bill. It's like $4 billion is just food. So the president is trying to mitigate or to import substitute that. And then tomorrow, you will hear some deals being pronounced or announced to mitigate that risk. There will be a lot of investment in rice, a lot of investment in sugar production, and sort of investment in
Sorry,
agri-food.
to be clear, is that production here in Kenya?
Yes,
or-
production
okay,
in,
okay.
so that we do not import.
Got you.
We want to
Okay,
be self-sufficient. Yeah. The next opportunity is on health in the pharmaceutical space. So, as a country, we import our pharmaceutical demand is 70% of our pharmaceutical demand is imported, which values, the approximate value of that is $1 billion. So we are seeing a lot of opportunities for manufacturers of pharmaceuticals. They come here and they already have the aggregate demand. Just in Kenya is $1 billion, but you can also expand it to the East Africa and the Africa at large.
Yeah. And just because a lot of our focus today on the subsequent conversations will be about financial inclusion, I just want to ask you how that fits into your thinking for the opportunities. When we talk about the spread and the growth and success of M-Pesa, and we talk about how Kenya is a global leader in terms of financial inclusion, how does that fit into the way you sell the country, so to speak, to outside investors or entrepreneurs who want to come here?
Okay, so when investors come invest in any country, first of all, they are concerned with the free flow of capital. Their capital can go in and get out without any restriction. And then they also are concerned about the safety of their investment. And in Kenya, of course, they are constitutionally protected. And we also have the Foreign Investment Protection Act to protect their investment. But when they do business, of course, they have to make payments. So payment system is key in their business transaction. And that is where the M-Pesa is playing a good role there to ensure there is efficiency in the payment system. But up to now, I think the M-Pesa transactions that are being done, it's almost 3 times of our GDP. But what the President Ruto has done in the financial inclusion space, we now have a fund called Hustle Fund.
You're right.
Yeah, which we have been able to accommodate almost more than 7 million people who are not included, financially included now. They are included into the fund and they are borrowing. We have almost disbursed more than 50 billion to these hustlers, people who are believed to be at the lower of the pyramid, the base of the pyramid.
And is there, I mean, how has that gone? Is that something that is expanding still? Or, because I know there was a lot of talk in the first year, but is that something that is still being expanded or still?
Yes, it is expanded. There are some sustainability challenges because people maybe they buy and they take the loan and they don't pay. But those are the risks which we have a risk management framework. But the positive is that there are many people who are now migrating from that micro level to a bridge sort of, like banking by introduction. Before they are properly banked, we are giving them another sort of loan so that they can become bankable and get into the banking.
So for you, the role that this plays is less about just today. It is just about building, as you say, the bridge for more Kenyans to come into the formal financial system.
And building the credit worthiness so that now they can be able to. It provides a record that this guy has been paying all his digital loans on time. So it reduces the need for collateral and all that because of that track record.
Okay. Mr. Permanent Secretary, thank you very, very much for your time. We've run out of time, but please join me. Thank you.
Thank you.
Thank you, Permanent Secretary. Thank you, Yinka. Ladies and gentlemen, I want to invite John Wenwa, the CEO of Invest Kenya, who will join me here on the stage to discuss how Kenya sits at the center of one of the world's most innovative financial innovation ecosystems. John. John, thank you very much for doing this. Thank you for Invest Kenya's support. A lot of buzz in Kenya. We're very, very pleased to maybe serve as an appetizer course to the main course that starts tomorrow, the Kenya International Investment Conference, which I know you've been spearheading. Maybe a little table setter. Kenya's been positioning itself as a leading hub for financial innovation, investment in East Africa. This is where M-Pesa was born and is known worldwide. But what do you see as the key factors that have enabled this? Where is there still room to strengthen this position?
Thank you, and it's good to partner with Semafor, head of Kenya International Investment Conference tomorrow, where we hope most of the colleagues and folks in the room will, of course, join us. And just to dive into the question, I think it's always good to unpack the landscape. Inclusion in the financial services, and there are bankers in the room, has really pivoted because of, digitization of finance. And statistics show that more than 50%, exclusion to financing services was, a couple of years back, more than 50%. Today it's come down to around 20%. And because of digital finance, inclusion continues to grow. But despite that, possibly 1.5 billion people in the world today are still excluded from the financial services. And when you come to Kenya, you have really an incredible story of what digital finance and financial inclusion has done. And I know there is a colleague from Safaricom and the story of M-Pesa, $300 billion plus annually in transactions and what that means, and really reaching the unbanked. And I think Kenya has really opened up, especially in the financial services, for example, the fintech space, startup funding today. 32% of Africa's startup funding is coming to this country. And most of the startups, you can guess where they are in. They're in the technology space, and they're also in the financial services space. And we think Kenya is really the pioneer and the leader in this area. Unfortunately, we do not have an access to financing in terms of inclusion focus in the conference, but we have a financing ecosystem focus where we're talking about access to finance for projects, for capital, what are investors really looking for. So really, Kenya is really at the nerve center of this, and we're really excited. And it's a good story for Kenya to the world. And I think nowhere else do you find on this continent a good story on financial inclusion, whether it's in digital finance, whether it's in, organic, brick and mortar banking, if I may call that, than what you find in Kenya.
And areas where you think that can be strengthened?
Look, Kenya has been a leader in terms of regulation. For example, if our regulator in the banking sector, central bank, was not very proactive, M-Pesa would not have been born. And the reason you find more than 85% of startups are based out of Kenya, it means the regulatory space is opened up, so everybody is running to Kenya. So we could possibly lead more, but I think Kenya is leading already. I was in a conversation a few weeks back, and it was with the techies, and we were discussing, and I think Esther from Safaricom, you were there in that conversation, and it was a debate on AI readiness, for example. And folks say Kenya, in terms of AI readiness, there was a report done, it says we're number 3. But the folks from the technology ecosystem, from Microsoft, Google, IBM, everybody says, no. Kenya is number 1 in AI readiness today. And what does AI mean? For example, in terms of the financing ecosystem. It's a good story, and I'm sure it will continue to get better.
It's a great story. So we can expect that the next M-Pesa will probably be born in Silicon Savannah?
We don't think the next M-Pesa. I think all M-Pesas and the others are born in Kenya. And there is a reason at the conference we have an AI event at the back of the conference so that we can talk matters technology. There is a side event on ICT and BPO as well. So Kenya continues to lead the journey ahead in that space.
Can we talk about public-private collaboration? And this is always cited as kind of critical to unlocking investment. In practice, though, what does that effective collaboration look like in your mind?
Public-private sector dialogue is really a critical area where government and private sector come together. It's never always a smooth sailing. Sometimes things get tough for different reasons. And when government is balancing delicate issues on the one hand and private sector is looking for a good return on their capital, That delicate balance calls for a roundtable dialogue. And government of Kenya has been at the forefront. We sit and we listen to private sector. We say this is not working. What can we do? Sometimes we resolve most of the issues. Sometimes we do not. But more often than not, the narrative is, are we listening? Are we doing something? Are we resolving issues? Are we continuously reforming? And I think there's been a good story in that front.
Looking ahead, how important is digital and financial infrastructure in sustaining Kenya's growth trajectories? What are the key priorities to ensure that growth remains inclusive? And here we're really talking about the last mile of financial inclusion.
I think financial inclusion and last mile linkage will go hand in hand with the government today, for example, through the digital superhighway program, is laying fiber, 100,000 kilometers of fiber being laid down to ensure every corner of the country has digital connectivity. And I'll tell you why it's important. Today we are talking about remote work. Someone in the most remote part of Kenya can work commercially and serve as a client that is in the most southern part of Europe, for example. And that is really connecting, commercial opportunity, riding on technological infrastructure. Then it gets a financial inclusion as an outcome. So I think Kenya is leading the pack, and is no doubt the reason we have a concentration of the tech ecosystem in Kenya is for that reason, and we continue to be proud. And I think more to what the PS said in his remarks, we are also leveraging on the financial ecosystem and financial inclusion to reach our farmers, to distribute seed and to distribute inputs so that we can be able to reach that very person who, before this happened was unheard of. And I think what that then does is really financial inclusion. We raise up incomes and the income disparities happen, and then the goals of eradicating poverty, including sustainable goals, really come to bear.
You've got a big show coming up tomorrow. About 700 people expected to attend from around the world. If you look back at the end of the week, what does success look like?
The show is actually for the president because he's the chief investment officer for Kenya. I am just but one of the people who make, the choir sing well. But I must emphasize that we are proud. We have 68 countries present tomorrow, half of which are really delegates who have flown in from around the world. We want to showcase some good projects. We want to celebrate some deals. We want to hear some policy pronouncements. And those all happen above my pay grade, but I hope they happen. But tomorrow is a day. Let me not take it away. And we hope to have you there and see how that goes.
We'll certainly be there. From one event organizer to the next. We wish you luck and success tomorrow.
Absolutely.
Thank you very much for doing this.
Thank you so much. Thank you.
Ladies and gentlemen, joining us now for our first headliner interview is Esther Waititu, Chief Financial Services Officer at Safaricom and CEO of M-Pesa Kenya, the success story. She'll be interviewed by Semafor Africa Managing Editor Alexis Akwajiram on the evolution taking place in the world of mobile money.
Hello, Esther. Lovely. Very nice to meet you. Please. Welcome, everybody. Thank you very much for joining us. Esther, it's a pleasure to meet you. As we've heard repeatedly, M-Pesa is something of a success story. And I wanted to start by asking you about the latest development, because it's been a success for some time.
Yes.
Obviously, it's ubiquitous in Kenya. The latest development...
I think your mic.
Okay.
Maybe just use my mic.
I'll use your... Can you all hear me now? That's better, thank you. Thank you for your patience. What I was going to say was the latest development is around retail trading. And I wanted to find out, first of all, what was the thinking behind that and why is it significant?
So good afternoon, everyone. Oh my goodness, I sound so loud. I'm up here. At M-Pesa, at Safaricom, our role is to basically transform lives. So we always look for areas where there has been little development or it has not been disrupted just yet. So why was trading so important to us? Trading was really important to us because if you're going to complete the whole circle of financial services, you need to first of all be able to make payments, which we're able to do, enable merchants, enable consumers. We then moved into, in partnership of course with the banks, being able to access financing. So when I'm doing a payment and completing a transaction, I shouldn't have to worry around where the money is coming from. I should be able to complete that transaction. That's where credit comes in. We then went into the space of savings, and savings was an important one because as much as you have access, and which is part of what Mr. Mwenda was speaking about, where we have now, Kenya has grown to over 83% in terms of inclusion. We now needed to make sure that individuals are healthy, and health comes from when you have unexpected events, being able to draw on some sort of saving or investment in order for you to access cash. And so that was our entry into money market funds. So last year we launched a very simple money market fund where there's money in your wallet, you're able to then deposit that in a money market fund, and north of 6% interest on a daily basis credited to you, and you can withdraw and invest at any one time. Then it comes to equities. Equities for a long time has been something very elitist. Very few people have been able, especially in the retail market, to be able to participate. And yet, knowledge of buying a share, it's the same way that you can, and I'm not saying that it's as easy as, you have to understand which companies you're purchasing and all of that. But the process was very bureaucratic. You'd have to walk into a broker's, you'd have to fill out a number of forms, you'd have to present your KYC, and then you'll have to start the process of trading. And so we said, how can we simplify that process? Because our customers are demanding more from us. They're saying, please show us other places where we can make our money grow. And so that is where the inspiration came to say, how do we then take trading to the retailers? So that's really how that was birthed.
And in terms of uptake, do you have figures so far on how it's going and what your projections are?
Great. So we started on the 10th of February. That's when we kicked off, which is just a month and a half ago. We today have 400,000 opted-in customers who are trading. The Securities Exchange prior to this had about 200,000, which has been stagnant for the last 9 years or so. So what we've been able to do in a month and a half is to double that number to 400,000. Today, the total number of volumes, the traded amounts on M-Pesa account for 60% of the trades happening on the Securities Exchange today. In terms of value, it accounts for just over between 4 to 5% of total value. Because a lot of the value that comes through our Securities Exchange is largely from the institutional investors. And so that composition of about 3 to 4% is actually comprised of purely retail investors.
And where are you hoping to get? In terms of projections, so let's say, for example, in 5 years, what numbers are you hoping to hit?
So that's a very interesting question, and the best way to answer it is that we want to see the development of capital markets in this country. And to see the growth of the capital markets sector in this country is to look at where do we want to go from a strategic point of view. The target has been that we needed to have at least 9 million retail traders. This is now countrywide, trading on the Securities Exchange. And so what we have started by now having just under 500,000 is a journey towards that. So within the next 5 years, the goal is to have at least 9 million retail investors in this country being able to trade equities on our markets.
And clearly, Safaricom is on something of a journey. You've gone from being a telco, a payments provider, now broader financial platform. I mean, what's next? Are there other innovations, other products that you're financial services you're looking to roll out? And over what period of time?
So our desire, of course, is to continue to transform and to penetrate in areas which have been typically underserved. So where are we focusing? What are we focusing on? And it's nice to see Paul Russo here. But one of the areas that we're thinking about and we're focusing on in a very big way is how do we empower more micro entrepreneurs, because they have not really been serviced very well by financial institutions. Small businesses and medium-sized businesses, that's really where we want to focus, because we go to areas which are difficult. We go to areas which have not been serviced in the way we believe they should be able to get service for. So that's one of the key focus areas. The second thing is M-Pesa has become very much an open platform. Today we work with over 100,000 developers who are creating different solutions on our platform. So if you think about, and simple services, when you think about access to public utilities, we've integrated with a lot of the providers so that it's easier on your mobile phone. When you think about retail services, being able to do tap to pay solutions for our customers and working with merchants to do this, that's also another area that we really need to focus on. When it comes to agriculture, in the space of agriculture, how do we make sure that we have disseminated and enabled farmers to actually start to collect real data and receive payments immediately without having to wait? That's another sector that we definitely want to play in. But this space where we're also enabling other businesses to grow on top of our businesses is a very big thing. We've seen the investments coming through on the fintech space. This year we've seen them at least grow by about 20%, which is an indicator that there's more and more digitization happening within our ecosystem. And so there's a lot more that we can do to enable a lot more of these developments.
And with these developments and these services and areas you're thinking about, I take it we're talking about Kenya specifically.
I'm talking about Kenya at the moment,
okay.
Yes.
And what about Ethiopia? Because Ethiopia is fascinating, and that's an opportunity, a real growth opportunity for Safaricom. So what services are you looking to roll out there? I mean, I know there's been talk of credit services, for example, savings. Could you elaborate on that and give us a timeline for those services being rolled out?
Okay, great. So Ethiopia for us is a huge growth market. It's one of the areas that we have put in a lot of energy and a lot of focus. M-Pesa was rolled out approximately 18 months ago in Ethiopia. Today we have over 3 million subscribers, consumers on M-Pesa, and just under 50,000 merchants in our ecosystem who also act as agents. And so the role that we're playing in Ethiopia is understanding, first of all, because let me talk about what made M-Pesa successful in Kenya, and then I can then talk about a little bit around the experiences that we're expecting in Ethiopia. So what made M-Pesa successful in Kenya is that it started with a very simple use case. All these things that you're seeing are things that have been built over a period of time once you've observed and seen the opportunities. But the use case on the onset was very simple. How do I send money home? Yeah, it is as simple as that. And through that ability to send money, it opens up different use cases. Then merchants get involved. Then you've got public utility providers then getting involved. And so in Ethiopia, we're going through that same process, which is ensuring that we have the right use case. And because the penetration of banking services in Ethiopia is also quite high, what we're doing there is then working specifically with merchants and businesses to help unlock. Of course, we're going to lift a lot of the experiences we have had here, because any business is always going to be short of liquidity when they need to make the payment. And so credit then becomes one of the tools that we then now use in that market to say, how can we extend credit in a meaningful way? The other thing is also enabling savings. Yeah, because you have to think about an ecosystem where you're able to access credit and you're able to also invest at the same time. So those are the three things that we're looking to solve for in Ethiopia. We're looking to see how can we enable and make payments a lot more efficient. How do we drive commerce in Ethiopia? How do we then enable a lot of the public utilities to also then use and leverage our rails? So that is the plan that we have.
And how do you enact that plan? I mean, how do you drive up scale in a market like that?
So driving scale is a very interesting question, and I want to make reference to what we've done here in Kenya. To just give you a couple of statistics, we've got over 38 million consumers who use our product on a 30-day basis. Maybe to make it more practical, we've got over 21 million customers consuming an M-Pesa service daily. And that's where the scale comes. But that scale cannot be built if we don't have a robust ecosystem. So for that to happen, it means that there has to be a point in which you put in cash and you're able to exit cash. And that's where the agency model becomes really important. So today we have over 300,000 agents across the country. We pride ourselves in saying that nearly every 2 kilometers is an agent. So you'll never be stuck for having to leverage or to use cash. And so the agent network has also been a very key enabler for us in terms of how we build scale, because it creates different points of representation where our consumers can then start to engage. We then go into the space of merchants, because it's fine as a consumer to have money to spend and an agent to put money in and out, but at the end of the day, you're going to be making a transaction. You're either going to be buying for something, purchasing a good or a service. And today we've got 3 million 3 million merchants in our ecosystem. So that becomes 3 million points of acceptance where merchants can go and present their wallets and actually accept. So it's building that robust ecosystem and then working with developers, all the different technology that we have, allowing developers to build on the rails that we have created. I mean, banks are benefiting from it. Retail, the retail sector is benefiting from it. Public services are benefiting from it. So that is the ecosystem that enables you to create scale where people can then now start to trade. So it's basically a network effect, which brings a couple of players in order for scale to be achieved.
And one thing that really strikes me in what you've said is that, I mean, networks, merchants, agents, this is hand-to-hand combat. These are real people and human interactions. That said, there was mention of a meeting you were in before where you were talking about AI. AI was the discussion. And I'm curious about what role AI plays in the future of rolling out financial services and the infrastructure that underpins that.
There's no future without AI in financial services. And I want to just give a couple of examples as to where we have used that and embedded that in a big way. We started to leverage AI in the spaces which created the most friction and the most pain for our customers around experience. So fraud, right? So today we leverage for AI to proactively determine where fraud has happened and to help us to resolve a lot of the fraud cases. Because wherever you're moving money, there'll always be an issue that either I sent money to the wrong person or I've been socially engineered. We're able to use AI to detect that, even in our business today. So we started by leveraging AI in driving a proper consumer experience. So that's where we've started with AI. The next space that we're going to be using AI is around product development. How do we simplify and ensure that all our products and solutions have been embedded and we can, want to create the segment of one, where when you're engaging with us, we're engaging with you as an individual, not the same thing that everyone else is seeing, but we're catering for your specific needs because we have understood your trading habits. We know that you like to, pay for your meals at about 6 o'clock in the evening. We can prompt you and say, we can see you in the Westlands area. You're near your favorite restaurant. Are you going to order? So it's embedding these experiences, leveraging AI and data to then make our customers' experiences a lot better. For merchants, for businesses, it's also how do we enable them to do their reconciliation, to engage with their customers, create that loyalty or that ecosystem within their framework that enables their businesses to grow.
Esther, thank you so much for your time. Unfortunately, we've run out of time, but I'm very grateful. Ladies and gentlemen, please join me in thanking Esther.
Thank you very much, Esther. Thank you, Alexis. And now to another headliner interview, welcoming Yinka back up to the stage, who will be interviewing Paul Russo, the Group CEO of KCB, on how financial institutions are helping build the foundations of East Africa's digital economy and what it will take to translate digital access into broader economic participation.
Hello, everyone. Good to be back. Mr. Russell, thank you very much for doing this. We appreciate you making the time. I wanted to just get sort of into it right away with just looking at KCB's role in sort of the marketplace and thinking about sort of the opportunities you see in expanding financial inclusion. I wanted to talk a little bit with you about how, the role of banks, right, as against, so much of our conversation, particularly in Kenya, is about M-Pesa and mobile money. But the role of banks in particular is really interesting because you are still, the heart of the financial system, even with M-Pesa. And the expectation is that a bank like yours will open up its system to, fintechs and the startups we hear about and APIs and all the rest of it, in order to really enable financial inclusion to really, move to that next level. How do you see it yourself from where you're sitting as running one of the country's leading banks?
Wow, sounds like a PhD thesis question. And after all those good voices, you come into a rough hoarse voice. So that hopefully will make sure that people don't slip. Yeah, let me just highlight on KCB, and I'll mention something straight into the question. So, 130 years of catalyzing development. So KCB is 130 years been here supporting clients to achieve their ambitions. Yes, we're in 7 markets, and 35 million customers, of a universal bank. But to push it a little bit, we are the first local institution to acquire fintechs. And people always ask people, why did you do this? And I think it's in the process of answering your question. To date, we've driven financial inclusion through amazing partnership with telcos. And I think that story is not told a lot. We don't compete with Safaricom. We don't compete with Airtel. We come together to drive that commercial opportunity, but as well as drive financial inclusion. A collaboration of telcos, regulators, banks, and governments. Those 4 key pillars is what is going to make financial inclusion successful in this country. If you went back to the M-Pesa conversation, if you go to our success story of lending, in 2025, we're lending 1.5 billion Kenya shillings per day through our digital systems. It is purely from those 4 partners model coming together. And I know John has done an amazing job in Invest Kenya, but one thing that we don't speak about is the role of government and regulators is in enabling financial institutions and telcos in this country to drive financial inclusion. I think that credit needs to be given. We've worked together to be able to deliver that. So there is space for all of us. There is space to grow the market, but only if we make our investments together. Certainly, telcos make significant investments in technology. We've made significant investment in technology. But for you to then scale it up to the next level, frankly speaking, you have to open up those systems for commercialization. And I know I have colleagues here who are highly technical, experienced in that setup. I lead a team of subject matter experts. You can invest in the best of the systems to be able to give you how many transactions per second. Probably some people have invested to 2 million plus transactions per second. But you've got to let other parties, and I'll explain why I mean. You need to let other parties come in to be able to commercialize the ideas. So let's look, for example, someone in fintech sits down, comes up with this amazing idea. They do not come up with those ideas for charity. They come up with those ideas for them to be able to commercialize. You've got the presence, you've got the distribution, you've got a customer base. They also come a number of times with their own customer base, but they need your APIs and rails to be able to commercialize. It is up to us to create that space. So when we went out to acquire Riverbank, I think that's a story that is well known, and 75% of Riverbank. Riverbank had been a partner for KCB on agency banking for over 10 years.
Right.
Certainly before I joined KCB. Right? And you've got to ask yourself, how do I transform this institution? How can I accelerate the transformation of this institution? And most at time, and for those who know me, I'm a human capital expert, you have to catalyze from outside. And I just felt going for fintech will help me catalyze. Here is the breaking news. We are ready for virtual assets when the regulations are done, courtesy of this institution. For KCB, if the regulations ever came and we'll be running around to say who is the partner to work with. I don't have that headache today. Esther spoke about AI. We made that acquisition formally in the last 4 months. What we've done with that institution on reconciliation for the group, not just Kenya. What we've done in terms of simplifying procurement. Going into the basics of creating, in my view, ability for our staff seated anywhere to query our own policies in whichever corner of KCB group and be able to give a standard answer on a policy. That basic, we've been able to transform that because of that.
Because of AI.
Because of AI and the capability from Riverbank. As I said, if I was looking at the old KCB, I would be having a conversation of procurement of a partner until cows come home to roost. PS mentioned something about Hustler Fund. Hustler Fund is a co-creation from idea to fusion between telcos and KCB. It is the first product, in a way co-created, using our idle capacity, in quotes, on people and systems to deliver a national importance of trial. And as PS said, we actually understood in our model that there is risk to some of the lending.
I see.
But when you have somebody who backstops, you can test certain things. And I want to demystify these laws from, of Hustler Fund. The entities must come through to test certain theories and certain ways and backstop for you to be able to actually say, this is my double A's, triple A's, this is my B's, across a population. And I was in the team from the banking sector working with the regulator. This was approved. We had individuals who were listed in CRB. We created a credit repair mechanism to allow these individuals to try one more opportunity to fix their credit score. It was deliberate. You can only do that with the backstopping and support of the government.
That seems to be your central message here. It's just all about every part of the ecosystem working together.
Absolutely.
To be able to really, so your central point really is, if we really want financial inclusion that is really effective, because that was one of my questions to you, was, there's a lot of talk about financial inclusion, and there are big numbers, like 83%. The question is, how much of this really works for ordinary people, right? Like, people can pay for, to get on the bus or whatever, but how much of this really lifts people up out of poverty, which is, really the challenge for every government as they think about development.
Yeah, and I think PS is here. Sometimes we don't communicate effectively, in my view, from government in a way. You do some amazing things. Hustler Fund, it should be a study about somebody. Here we have shortage of PhDs in Kenya. A very good topic. I read today, it's there. It's a fantastic topic to study. But look, it did 4 things top of mind. One, it brought the regulator, they were on the table, government was on the table, telcos were on the table, banks were on the table. 2, it tested to see this category of people that we say are listed, and they're not few. I think we had close to 9 million in that category.
Right.
Can there be a repair mechanism? And 3, there was a pricing conversation. Certainly telcos, and I'll talk about costs, and ourselves would probably not take that risk also on pricing. So you're talking about people with past credit issues. You want to give them a credit score and a chance, and you want to give them at a lower rate. You needed government to backstop. Today you can take that data, it's available, and you can do a lot with it. And I think there is also, banks have offered a collection mechanisms for those parties that have not paid. So there is a bit of a lot that happened within that Hustler Fund, in my view, and I know I'm taking space that is not mine, because Hustler Fund is not for banks, it's not for telcos. It's a manifesto for the leading party. But you've got to bring that to life as a collective. So I'm agreeing with you. But we still have a cost problem. Whether you're transferring costs from technology, you're transferring cost from cost of funds in itself, right. The human capital cost that you have to load in. And I'm chairman of Kenya Bankers Association. We still have to deal with cost.
You've already asked. You're answering the question I was about to ask you about the fees, and how that affects.
Yeah, we've got to address, and it is still a collective with all those parties, because Kenya 2 years ago we had -1, -2 or thereabout on private sector lending growth. We turned the curve. I think we got to 6 in the last MPC, 6 to 7%. We're facing the right direction. But if you don't get to double-digit growth of private sector lending to private sector, we have a problem. Now, we've got to go what I call micro loans. You churn them fast, but they have to be directed to meaningful impact, not just consumption. So there's also where are these loans going from? And people will wonder, is this guy a banker that he wants to take our margins and so forth? I also have a balanced scorecard to grow my margins. But it's got to be a game of volumes. But it's got to also go to meaningful small enterprises. One, that creates a return to the owners and the people that run it, but also creates opportunity for employment. And that is another important element, and we saw what Gen Z did in this country. We're not out of the woods. We've got to collectively, it is not government responsibility to create employment, it's not banks, it's every single person has to play their role. We think we have an opportunity in the financial services sector, correctly price, correctly disburse, and create a multiplier effect downstream.
Have you reached any sort of agreement as to when this is going to happen, where you're going to sort of really work on bringing these costs down for consumers?
A lot has happened.
Is it still just in the talking stage?
No, a lot has happened. I think Central Bank of Kenya must be leading in rate cuts in the last 4 MPCs. We've moved interest rates from the 20s. We're barely struggling to be in the 13s, the 14s in the last 1 year. Banks have continued to lend. You've seen the growth as we release results. I think there's always debate of is government crowding or not. And it's a common across the region because we're in 7 markets, right? But we are seeing trend. Like I said, we've moved to 6-7%. We are now seeing, the cost of credit coming down. None of us predicted Iran to happen. will it have a backlash on the direction we are taking? But I can tell you from a banking sector perspective, there is a shared understanding between the regulator and banks that we must bring the rates down.
That's a fantastic place to end the conversation. I could talk to you a lot more about this, but please join me in thanking Paul Russell from KCB.
Thank you.
Thank you. Thank you. That was fantastic. That's fantastic. Thank you.
Thank you, Paul. Thank you, Yinka. And now to another partner perspective session. I want to welcome to the stage Nanjira Sambuli with the Gates Foundation. Nanjira is a senior advocacy officer, and she leads Africa advocacy for inclusive financial systems and digital public infrastructure. I would struggle to find anyone more qualified for this conversation, and let me tell you why. Nanjira, you're a Kenyan researcher and policy analyst who is focused extensively on the impacts of technology and digital equality across the African continent. Those are pretty amazing qualifications to talk about inclusive financial systems. First of all, thank you again to the Gates Foundation for championing this series. We've had 3 events to date. We brought the conversations to Abuja, to Johannesburg, to Abu Dhabi, and now culminating here today in Nairobi. And what I've really loved about these conversations is their focus on just the basic fundamentals of everyday life. How people transact, how people buy things, how people save, and ultimately how all of this is just the engine for human progress, things that normal people every day kind of overlook, but are quite important. You guys look closely at this stuff. Global Findex data and digital connectivity tracker shows strong progress globally, but they also highlight really persistent gaps in device ownership, internet access, meaningful participation in the digital economy, like the gender gap. When you look specifically at East Africa, what trends are standing out most to you?
Good afternoon. Just checking if the room is still with us. It's quite important. Yes, greetings. I received the greetings. Thank you. Well, with East Africa, some have called it the epicenter of mobile money. And so at the core of financial inclusion in East Africa, across the board, mobile money has been the leader in adoption of mobile-led financial inclusion, and especially in countries like Kenya and Uganda, where it's seen across the board. We've seen that there's a strong correlation between mobile phone ownership and growth in financial inclusion, and especially, again, mobile money. And this is a phenomenon that's not just anymore in the urban areas only. It is seen in rural areas as well. But as you pointed out, there still remain gender and income gaps where women and poorer adults lag in ownership and use of financial accounts and digital financial services. And then also access is significantly outpacing active use. So we've hit the numbers, and I think Kenya especially has been at the high 90s for a while now in access, but then use is another story, especially in use of digital payments and account savings. So that, in other words, financial resilience is still something that we need to better understand. Is access enough? This is an outstanding question and is a big one for policy and innovation alike. Because how do we translate this great numbers of inclusion into active use and financial health? Because access alone does not equate financial well-being.
You talked earlier about mobile ownership really unlocking that access. We've seen kind of mobile technology evolving far beyond just communication. In many ways, it serves now as the connectivity infrastructure and financial infrastructure, effectively acting as part of the region's digital public infrastructure. How should we think about mobile's role in shaping the regional's digital economy going forward, though?
Yeah, the smartphone is both a digital connectivity indicator as well as a financial infrastructure indicator. It is one of the strongest predictors of financial account ownership, actually, and especially in East Africa. And mobile money is often the first and only primary financial account many users will have. in the case of digital public infrastructure, it's also the access point. By that we mean that this is mobile enabling government-to-person payment transfers, wage digitization, informal to formal transition, which I think is something worth studying deeper to the question about PhDs that was mentioned earlier. The interoperability of instant payment systems, and then again, mobile can contain the credentials that help a user authenticate and identify themselves for verification purposes. So in that regard, the mobile is at the core. The ecosystem of mobile is at the core of both connectivity and financial inclusion. But here again, we see persistent gendered divides because women will still lag in ownership of devices, which means they will lag necessarily also in accessing mobile accounts. And this concentration, while great, also introduces new risks, especially as far as cybersecurity goes. So there's that trade-off that we have to keep an eye out for.
Now, access is just only one part of the equation in financial inclusion. Participation is the other part. We've seen mobile money dramatically expand access to financial services across East Africa. But when you think sort of beyond having a mobile phone, having a bank account, what innovation or policy shifts do you think are needed to move from access to real meaningful participation?
The previous conversation started to get there. Lowering the cost of device ownership remains persistent question, policy and innovation alike, as well as mobile money services. The Kenyans in the room will know it is expensive. It's great, but it's expensive. So lowering the cost is a next mile question here. And then, we hear a lot about digital and financial literacy, and nowadays we talk about both of them, but I believe strongly they have to be paired with strong consumer protection mechanisms that allow quick redress to foster and retain trust in that system. Because it takes a lot for one false, fraudulent activity to knock people off using the systems altogether. So making sure that both sides of the coin are addressed at the same time is super important. And I think it's also really important to understand how safety practices differ by gender, income, and even geography to help tailor interventions in this awareness and literacy. The data showed, for example, in the Findex data, that use of passwords on mobile phones was lower among women. And this could be in part because sometimes devices are shared. At the same time, even when thinking about how to drive more ownership or purchase of these devices, we find that gender intentionality there does make a difference. And there's a great story Copper released a couple of weeks ago about their realizing that they were more likely to sell to men than to women, and little interventions in how the sales point was designed made all the difference. So still very human, understanding who you're trying to serve and making sure that you're working with them and through the biases that they're probably trying to fight against to actually make sure that we close these gaps. But I want to close by saying that even the lack of money itself, right, remains a double barrier to financial inclusion. If I don't have money, I can't buy a phone. So I can't see the case for a mobile money account. That remains the reality. And so the conversation, hopefully, that started today around Hustler Fund and all these other things can really start to go deeper into, are we lifting people, well, I don't want to say lifting people, but people moving progressively along the economic opportunity journey to actually have money to own these devices and these accounts.
So thinking beyond just transacting and thinking also about savings, credit, capital markets participation, there's initiatives like the ZD Trainer in Kenya. How significant could this shift be to expand economic opportunity, do you think?
I think it's starting to signal the shift of the direction of travel. We've celebrated the mobile money moment for the better part of a decade, but there's a big question around what next? What else? What's different? And some key shifts that we think here will make the difference and change the game start with interoperability. Of systems, of mobile money systems, and I know there'll be a panel that will speak to this a bit more. This will scale use. So lately we think about inclusion in this sense that there's inclusion of users, but there's inclusion of service providers and innovators into rails that allow everybody to play. So those two things are what will drive and unlock that what next, I think. And I think ecosystem connectivity is the name of the game here. We're talking about this being a policy and innovation imperative to facilitate more than just peer-to-peer payments. A lot of the numbers that are floating around are great, but they're still person-to-person payments. What happens to digital merchant payments? How do we ensure that people are not just transferring money, but actually mobile money becomes a full suite of economic participation? These are the directions of travel that we need to see, and that will guide investments going forward.
The fact that we're talking about these issues is kind of a sign of progress, isn't it?
Progress, but I think at this point it's less just about innovation in the tech sense. It really is about innovation in how we work together, play better together, and how start addressing these great agendas we have, like the continental free trade area. Things about how do we start making sure the regulatory friction across borders starts to allow for the room to scale. So you find a lot of what we have to solve for next. Yes, innovation will be important, but policy innovation, and not just as a function of public sector alone, but for all stakeholders in that ecosystem will be very important. In other words, we're headed for some really interesting conversations and shifts.
One of the glaring realities of the last Global Findex report is the gender gap. An enormous amount of progress in the last 15 years, but out of that 20% of the population that still doesn't have access to traditional banking services, the vast majority of them are women. Where do you see the most promising opportunities to accelerate women's digital and financial inclusion?
I mean, I've alluded to it, but I'll really say understand the person you're trying to serve, and you'll meet them at their point of need. It's really as simple as that. Often it's been an afterthought. We've made great progress in talking about gender-responsive policies, gender-responsive innovations, but really placing that front and center and making that the status quo of how we move forward is how we will consistently and meaningfully close that gap.
Perfect. Sorry, Nigeria, we're a bit out of time, but I really want to thank you from the bottom of my heart, and please, thank you very much. Please give a round of applause to Nigeria. Thank you very much again to Nigeria. I want to invite now George Olaka, who's the country head of Arise IIP. He will be talking to Alexis about industrial ecosystems and how they can unlock productivity and increase access to opportunity.
George, good to see you. Thank you. Okay, I'm going to try again with the sound. Can you hear me? Okay, that's a yes. George, pleasure to have you here.
Thank you very much for having me.
So first of all, I wanted to get your sense of how digital technologies, financial inclusion, how does that fit into building an industrial ecosystem?
Thank you very much. I think the big elephant in the room today is financial inclusion. But after all that is done, for me, financial inclusion is about access to money. Mm-hmm. But then, how do we make that money productive? How do we make that money build what we need, create jobs, build factories? And that is where what we do comes in. There's been talk about the digital ecosystem, the financial ecosystem. What we provide as Arise IIP is to provide the industrial ecosystem. Mm-hmm. And how these two link up is once you have provided the financial inclusion, how then do you provide the economic inclusion? And for me, that is the bigger thing that we need to go into, because to give real life examples, as late as today, let me use my aunt as an example, because then there are many. If today I'm asked for money, then I will use M-Pesa, financial inclusion. They can access it, I can access it. But then that cycle is not broken. It will continue as long as the other party is not able to produce what they need. And therefore, what we want to build with all stakeholders, and using the word stakeholders is a very deliberate thing I'm saying. What we are building together with all stakeholders is to build what we can call economic inclusion. And that is, for me, the link between the subject of the day and what we do as a RISE IIP.
And to be clear, what's the distinction between economic inclusion and financial inclusion?
As I have said, financial inclusion is all about access to money. Savings, credit, insurance, payments. Economic inclusion is about production, investment, jobs, factories, things that have an output, have a return on income, and really move the country and move everybody. Economic inclusion is about having everybody being able to participate in an economic activity that transforms them from one position to the next.
And to what extent at Arise do you draw on some of the technology we've spoken about to really move forward, move the needle on that economic inclusion that you're talking about?
So what we do essentially is just going back, we believe that the SME of today is the Bill Gates of tomorrow. And therefore, what we try to provide, working across the spectrum from the very low sectors in the economy to the very high sectors in the economy, is to provide the capacity, the space, the ecosystem for whatever you call it, whether you call them investors, whether you call them business people, to be able to access a platform that makes it easier for them to do business. An example is given, and I was talking to somebody today who is in the pharmaceutical space, and what he says is that for him to invest, assuming you have $1 million, 1 million shillings, whatever, and you want to invest in the pharmaceutical space in Kenya, for example, you have a checklist that can run from 1 to 100 needs that you need to meet. If you are supposed to do 50% of that checklist, it requires time and it will cost you money. This is the money you should have invested in productive engagement. What we do is now to provide that capacity and capability for you not to spend money on things that are unnecessary for you, but to really spend on what gives you a return. And therefore, so to speak, I'm not a risk practitioner, but what we are trying to do is to de-risk investment for investors. Whether you are a $10 billion investor, you are 1 million Kenya shilling investor, please, we are creating an ecosystem that allows investors to come and do what they do best, which is to invest, to produce, and to make goods and services.
And you mentioned this issue of risk, but sometimes you can't do anything about global shocks. And we've seen global shocks, at roughly 2-year intervals. We've had the pandemic, then we've had the war in Ukraine, now we have the war in Iran. So my question to you is, how do you build resilience into what you do at Arise? Because, that affects the cost of your inputs, for example, because as I'm sure the audience knows, you were developing a series of industrial parks and special economic zones. But all of those shocks that I mentioned, they affect the cost of your inputs. For example, now we'll see the cost of fuel go up, for example. So how do you build resilience?
So I think it goes back to building capacity. It goes back to looking at what is critical to the country. And I think if you go back to classical economics, there's comparative advantage, there's competitive advantage. Before you resolve comparative advantage, then you cannot be competitively, you cannot access the competitive advantage. What we do in our zones is very specific. You identify something that is specific, particular to a location. If you come to Africa, for example, most of the countries are rich in minerals, for example, are rich in commodities. Talk about cotton, talk about sugar. So you need to create an ecosystem that revolves around what you can control. And that, therefore, any other thing that is coming as a supplementary or a complementary then rests on the back of that. And that means that assuming, okay, now we have the US-Israel-Iran war. Mm-hmm. Oil is a problem. If you go to some parts of this country, there's massive acreage of land which is not doing anything. Assuming we planted sugarcane, assuming we planted whatever, cassava, these are crops that you can use to produce whatever fuel, biofuel. And instead of depending on fossil fuel 100%, you can do a blend. And therefore, it means you reduce your import dependence on these external shocks. But what does it do? In as much as you are providing shocks, then you're also providing the production capacity that the country needs. And therefore, we build ecosystem that can support these core industrial activities that anchor the zones that we do. So for us, industrial zones are not a land play. It's not about land. If I have $10 million, I can go buy any land anywhere in Kenya. But you see, that is not what you need. It's not just about land. It's not about water. It's not about electricity. Anybody can access these things. But how do you interconnect all these things in such a way that as an investor, and again, we are not agnostic to it being foreign, local, investment is investment. How do we make it easier for investors to be able to plug and do what they do in the best way possible, in the safest way possible, in the fastest way possible? This is the platform and ecosystem that we provide.
And just zooming out slightly, you're the country head for RISE here in Kenya. I mean, just can you talk us through what you see as Kenya's potential as a manufacturing hub? Because in your zones, we're talking about ethanol production, you're looking at building up textile manufacturing. What potential do you see, and how do you actually realize that potential to go from theory to actually making it a reality?
The big economies of this world, talk about China, the US in the earlier years, Europe, have really developed from raw materials, raw commodities. So for Kenya at the moment, if I go direct to your question, cotton textile is a big industry. Just to give you terms of numbers, I didn't want to go into numbers, but the import bill for textile in Kenya is $2 billion. Out of the $2 billion, EPZ uses about 600 import, exports 800 worth of textile. So it means in terms of value addition, we are only adding 200 million. Our import bill is 2 billion. Statistics show that for 1 acre of crop under cotton, you need 1 farmer. If you are to put 1 million acres under cotton, you automatically have 1 million people under employment. If you have 1 million acres, that can support close to 5 indirect jobs. So even if Kenya just works properly on the cotton, textile, apparel ecosystem, then in 5-6 years, you can create 5 million jobs, which is not rocket science. It has happened before. We've done it in other countries. And it's something that we are championing in Kenya. For example, we have now leased Rivertex. We trust that Rivertex is going to start operation very soon. What that means is that if I go and speak to a farmer today and tell him, can you grow this crop? The question they will ask me is that, who is the off-taker? I don't want to be conned by a middleman. Middlemen have to make money, so they will press you down as much as possible. So if I were to go to a farmer today and tell them, can you grow cotton? The next question is that, who is the off-taker? I tell them the off-taker is Rivertex. EPZ imports 600 million worth of fabric. Why can't we produce that locally here? That saves us on FX, it creates jobs, but it just makes us globally competitive. But I think at the end of the day, what we need to do is that now that takes me, once I have the comparative advantage, it takes me to the competitive advantage. Mm-hmm. How do I compete against, without mentioning names, how do I compete with the people outside Kenya? And that means that I have to make my product as competitive as possible.
How do you do that?
How do you do that? It's a collaborative effort. Work with the government, the cost of power. Compared to Egypt, for example, it's something that we need to work on. So we have to work through the entire ecosystem in such a way that we make our cost of doing business as competitive as possible. Let me not say as cheap as possible, but as competitive as possible. So that tomorrow, if my auntie at home goes to buy a dress, she has a choice whether to buy an imported dress or buy a locally made dress. But because I believe that I'll be competitively I'll be competitive in terms of price, in terms of the quality of that cloth, then I don't need the government to bring in policies and measures to stop importation. I can beat importers right here in Kenya.
And I mean, the central thesis of the next 3 billion is just the idea that there are around 3 billion people in the world who are not properly connected to the internet, who don't have access to digital technologies in the way that can be transformative. And our conversations are built around that. So without giving away trade secrets, how can you harness some of the conversations, some of the technology that we've been talking about in conversations so far today? How can you harness those technologies to give yourself that competitive advantage and also create jobs and improve efficiencies?
Without giving our secrets, but I think it's about creating capacity for that, capability and capacity for that industry to be able to thrive. We know that the world is going tech, AI and all. AI needs a lot of computing energy, computing capacity. Because of what has happened globally and recently in the Middle East, it means that there's a very big opportunity for example, data centers, the mega data centers to be spread across the world. I think we are moving away from a scenario where the Microsoft of this world will want their data center to be based in Europe only, to be based in Asia. So I think we sit at a place of opportunity in that even if we look at it from digital inclusivity, we can host these data centers in Kenya, and we can host the mega data centers. If we work together as a government, as private sector, as stakeholders, why can Microsoft, Google come and put their data center here? Why can the internet companies not come and put their data? It means that therefore that access to IT and network capability is localized, and therefore we are not faced with the, anything that happens outside there. We have it here. I think this is something that we need to look at seriously as Kenyans, as a government, and we invite investors to come have a discussion. We'll provide you the capacity, capability. If you need power, we are working on power, so don't worry. You're welcome, and let's have a chat.
And do you see any signs that these changes are happening? You're saying that there's an opportunity. Have you seen any signs today, any examples that you could cite that this opportunity is being seized in Kenya, or beyond that, elsewhere on the continent?
If you ask me, I don't want to be very political about this. I think there's a lot of talk, good talk, with no action. And I think the only way we can seize this action is to implement all the lofty ideas that are being thrown around. They are good, but I think we now need to move from round tables, so to speak. I'm not trying to be negative about this, but I think as a people, we need to move away from talk to implementation. And I think for us, that is what we are doing.
I think it would be churlish of me to ask another question. So less talk, more action. Thank you very much for your time, George. Ladies and gentlemen, please join me in thanking George Olaka for his time. Thank you so much. I really appreciate it.
Alexis, let's save less talk, more action, more talk. A couple more sessions to go here. But thank you again to both George and Alexis. Alexis, actually, you need to stay on stage because we've got a panel discussion now. I'm mixing a little bit. Sorry? Oh, okay, apologies. Yinka, please come back up to the stage. You're going to be doing this panel discussion with Gutuki Kireka, the CEO of PesaLink, and Jacqueline Juma, the Director of Advocacy and Capacity Development, Africa Nenda Foundation.
Can we move you at the center? And you can move your seat in a little bit. Thank you. See, I see what Guillaume was trying to do there is trying to make sure that we really squeeze all the work out of us at Semafor. Anyway, thank you.
Thank you. This is going to be a great conversation. It will follow on from some of the conversation with Nigeria from Gates earlier. Sort of a broader conversation about financial inclusion. Just sort of looking at, you know, like many of the conversations around development, particularly in Africa, you know, we say a lot of like great words, and I really wanted to get both of you who are kind of looking either as operators or as people who are really analyzing the numbers, truly to try and understand what these numbers mean, or what, you know, what some of the statements we hear often, what they mean. So I wanted to start out by just asking about whether, you know, despite the fact that you look at a country like Kenya, where we've talked about the over 80% financial inclusion, lots of success with M-Pesa, lots of success, as we talked about there with the CEO from KCB about, you know, systems working together, better regulations and all that. You know, nobody said anything's perfect, but we seem to be on the right path. From what you're seeing, and I'll start with you, Jacqueline, how successful is this financial inclusion really? Like how much, is it really changing lives for everyday people? What are you seeing when you look at the data, the numbers, the research?
I think it's true. Kenya is one of those sung heroes when it comes to financial inclusion, the bastion of mobile money, 2 decades now. But I think following what everybody has said in the room when it comes to financial inclusion, I'd like to unpack it differently. Maybe we pause and look at financial inclusion not as a destination, but as a journey. Why not as a destination? Because I've had my colleagues who've come on stage before and said, you know, in financial inclusion, we're doing well. We're well over 90% and so on. Yes, in terms of just one aspect. Financial inclusion in itself is a journey that has very many dimensions. It's not only about providing access or availability to financial services, availability of financial services. You have to look at the usage. You have to look at the quality of the solutions being pushed across. You also have to consider that the consumer has to be empowered. I stay shy of always talking about consumer protection because it doesn't read well, and that's a story for another day, I will not digress. But when you look at all these dimensions, and specifically if we can dive into the Kenyan scenario, usage, M-Pesa is like almost our last names, all of us. In the year of our Lord 2026, only 52% of Kenyans are using M-Pesa daily. So it means that we still, even with the 90% financial inclusion, which many people only tap into the access pillar, we still have usage issues. We've not even moved to the quality scenario. Talking about affordability, I think Nigeria mentioned about how costly it is vis-a-vis what we see in other markets or other contexts, okay? And we still have other metrics around quality, for instance, when it comes to, you know, fraud. We still have issues around consumer empowerment. You know, we're not seeing redress mechanisms work truly, especially for the rural folks, in the way that we would want to have them drive the trust, to have us use M-Pesa daily and move beyond the 52%. So let's just unpack financial inclusion by not saying that, yes, everybody has an account. Of course, everybody has an account. Today, the FSDK people will tell me that we have about 94% of us financially included. Yes, we have accounts, but I even feel like it's more than that. It could be more than that. But what are we doing with these accounts and wallets?
Exactly.
Yeah, thank you.
I mean, which brings me to the other question, what really is the right metric? What should we be thinking about? Or is there some other way we should be thinking, when we talk about financial inclusion, what metrics should we really be paying attention to, or which metrics, if there's more than one, that you look at, that you see daily from the transactions that you see on your platform?
Okay, just to put into context first, what do we do at PesaLink? And there's been a lot of talk about mobile money this afternoon, and really proud of mobile money in this country. As PesaLink, we are a switch. So we are de facto national switch for the country. We have multiple participants. Participants are the institutions that are integrated with PesaLink. And PesaLink was funded by the banking sector. But just like is the case in many other countries where you have got national switches, we integrate with all payment participants. So, for example, we have all banks on board PesaLink. We also have one telco. We are in talks with the other 2 telcos, and soon you will hear some announcements around telcos coming on board PesaLink. We also have over 125 SACCOs that are today, whose customers are leveraging PesaLink network, either directly or indirectly. And we have over 25 fintechs. Yeah, so I think a lot more needs to be told about our story. And so are we competing with mobile money? No, we are not. Right? Our participants compete with one another. Right? We enable movement of funds between these participants with ease. So what we say we're here to do is to simplify life through instant, affordable payments for everyone, everywhere, every time. Okay. Yeah. So that means that I should be able, we talk about interoperability as well. Just let me, if you take away nothing else from this afternoon, there is a difference between interoperability and what we do. So interoperability is when you have 2 systems, typically closed loop. So your bank, for example, is a closed loop system because you can only move money within your bank, for example, unless they do something about that. So interoperability is when 2 closed loop systems, say a mobile money network and another bank, work together, integrate technically, and sign bilaterals to transact with each other. What we do is we go beyond interoperability. We drive an open ecosystem, which means that any of our participants can interact and transact with one another without the 2 of them ever having to sit down and sign a piece of paper, go into agreements and bilaterals, etc. Yeah? And that's real value that we bring to the table. Now, back to your question. Some of the data that we look at. The central bank just released in October, I think it was October of last year, if I'm not wrong, no, December, sorry. I should know this was my birthday, 4th of December last year. They released a national financial inclusion strategy. Okay. There are 2 things there that caught my attention when it comes to the numbers. Right? They've called for the cost of the reference mobile money, but I would say that this also goes for instant payments. And mobile money and what we do, what we power is all under the same category of instant payments. They call for a reduction in the cost of instant payments from the current average of 28 down to 10 shillings by 2028. They've also called for an increment in the bank account utilization from 45% to 60% in the next 3 years. Right? So when you ask me about what's financial inclusion, I look at it from what are the barriers there.
Yeah,
so
exactly.
That's a barrier there, right there. Cost is a barrier. Just put cost into perspective. In India and Brazil, person-to-person transfers are free.
Right.
Yeah. Person-to-merchant payments in Brazil are 0.22%. Yeah. In Nigeria, where there is a cost, last time I checked, I'm told by my Nigerian friends that it's come down. It was 2 shillings or 4 shillings equivalent in Naira. It's next to 0. So cost is definitely a barrier, right? And that needs to be addressed. And also, as also other panelists have talked about, when you talk about in the banking sector, utilization of bank accounts at 45%, and the banking sector is the one that really comes into play when you talk about economic inclusion, then we have a challenge there. We have a lot of work cut out for us.
No, thank you. It wasn't just a barrier. It also was my next question. It was about transaction costs, and I'll bring it back to you, Jacqueline, in terms of, I mean, it seems obvious if you lower transaction costs. It seems obvious if you lower transaction costs, it will encourage more spending. I mean, how important do you think it is, from what you've seen so far? And is that 2028 targets? Is that even soon enough? Is that low enough? What are you seeing from the research?
I'm not sure I'll be able to answer whether that is low enough, but I can say from what we see is that reducing the cost to transact would eventually bring more people on board to be able to transact more, and especially people who are in the certain segments, especially the rural areas and so on. Why? Because when you look at the affordability vis-a-vis the alternatives that they have are fewer than those people who have all sorts of alternatives around them. The other thing around why this cost might translate to more people using is because the reduced costs now introduce more the ability or the flexibility of users to perceive convenience in many ways. Because at the end of the day, the Jacqueline on the street just wants to make money move. They don't care whether it's from a bank or from a wallet. If you're going to introduce any sensitivities to the cost, then it makes sense to them. They don't care about the branding. They don't care about the players, or they don't care where it's a wallet. They just need this money moved. So if the barrier is them being able to access this affordably, and affordably here is relative, you're looking at this, on one hand, you're looking at the cost, and on the other hand, you're looking at what is being perceived as the convenience. Because in many climes, especially in the rural areas, someone will tell you that I'd prefer traveling, you know, and going to do an over-the-counter transactions or going to the agent's location to transact. They're forgetting that the traveling also involves the cost. So that's why I was saying I don't know if it's low cost enough, but we want as low cost as possible, which enables users to both be able, so they're driving the ability to use and the willingness to use.
I suppose the other, again, KIICO brought this up, the other aspects of this is also the other aspects of convenience and the cost is also interoperability, right? Can you move your money from one place to the other without, you know, is it even possible, which is kind of where you guys have come in and sort of built a business around this. I mean, is this, I mean, there's a bigger sort of regulatory concern about this with the big platforms, between the mobile money platforms, for instance. There's been a lot of discussion, obviously, here in Kenya. But how much more does that need to happen to really open up the market and really drive financial inclusion forward?
So I think in this country, I think we've done a great job in terms of the systems that we've built, the ecosystems we've built, you know, moving money within the banking sector, within my own bank, moving money within mobile money networks of the same telco works, you know, beautifully, right? The challenge that we have is one of, again, we've built in silos, yeah, and so, you know, you've just had the numbers on the agent network of mobile money, for example, of Safaricom, which is 3 million, was it? No, 3 million merchants and 300,000 agents.
300,000 agents, yeah. She said earlier, yeah.
And the banking sector has also built massive agent networks, right? Paul here will tell you about their numbers as well, which are in the hundreds of thousands. Right? But what it has meant, if you go to a rural place, particularly in Kenya, you'll go to a retail location and you'll find that the same retailer has been onboarded as an agent, right, by 5 entities. Yeah, I wish it was just done by one entity, and the other 4 entities went and enabled 4 other retailers, right? That's what really needs to be tackled. Yeah, and we are doing that today. There's a lot more that needs to be done. When participants, you know, on the Pesalink banks and telcos, when they went out and built agent networks, there was a lot of it's my network, right? I own the agent. Well, no one owns us, right? Just like the ATM play, when ATMs first started, it was on-us transactions, so my customer, my agent. And so we are working with participants to open this up, and thankfully, right, they are very keen to do so today. And we are speaking to the large agent fleet owners for them to open up their agent networks. Also, we believe that if I see a merchant location and I want to make a payment and I see what in this country we refer to as till numbers, I should not have to think about, oh, do I have money in that ecosystem to make that payment? Right? So I see a bank till number, or I see mobile money till number. I should not have to ask myself, do I have money in this ecosystem to pay there? And that's what we're powering. So we're going to be powering, by the end of the year, you will see us launch agent cash and cash out interoperability. And your banks will just simply tell you, go to any bank agent and transact. Right? We'll launch person-to-merchant interoperability as well. So it doesn't matter whether I have my money in a bank account or I have money in my mobile money wallet. You can be able to make a payment to any other merchant using the till number you see in front of you. So those are things that we're doing in reality. And something else that we're also doing is moving money between bank accounts is hard work. Right? If you pay school fees today, you'll get a letter from your school. It's one line to pay them via mobile money. It's about 4 or 5 lines to pay via bank. The banks have a full half page for themselves. Right? And that's because you need to provide a bank name, you need to provide, people think you need a bank branch, others add a SWIFT code, then a long bank account number, anything from 10 to 16 digits. In Nigeria, with 5 times our population, the standardized bank account numbers, they're all 10. If a digit missing, I will know. So we're going to introduce what we're going to call PesaLink ID, which is an enhanced aliasing system, which means that you're going to be able to map your mobile phone number, just the digits, right, or your national ID, tomorrow could be an email address, to your store value. And that store value can be a store value that is held by any of the participants within the PesaLink ecosystem. So I could link my PesaLink ID, if it's my national ID, to my bank account. Tomorrow morning I could wake up and link it to my SACCO account. Tomorrow morning I could wake up and link it to my mobile money wallet. Because when I'm sending money to Jacqueline, it doesn't matter, I should not care about where the money is going.
Who should be responsible for building this? Who is this something that has to be done by a regulator?
It's done. It's done. We've built it. We've built it. Right? It's done. It works today. We have a legacy system, so we're going to be enhancing it. We're going to change. We've learned. We have a number of lessons that we've picked up. So we're going to enhance it. We're going to give it a name. In Africa, until the child needs to be given, a name. So we're going to give it a name, so it can really go out there with a service that people truly understand and adds value. What means that if I'm an organization, if I'm government or a business, and I want to make disbursements, right, to hundreds of people, right, and I have their credential, being, for example, a mobile phone number, I can decide, do I want to do this from my bank, or do I want to do it for mobile money? Right? And with that simple number, which becomes then so critical in the world of payments, then you can be able to open up people to more options when it comes to where they get their money. And that, I think, has gone a long way as well in driving financial inclusion. So we're not locked into ecosystems.
No, thank you for that, and I will be talking to you afterwards. So we do get the name. Jacqueline, just to wrap up, one of the topics that financial inclusion is one of the topics that I feel that when I'm in an African country, the government actually gets fairly good, comments, right? It's a rare thing. People say, "Oh, well, the government's, been, decent and done a good job in terms of," and this comes from the private sector as well as people in government, obviously. I'm curious if you feel there is still one thing. If you could think of one thing the government could do, or the regulators could do, to really be that, last push for financial inclusion, to really, to be as effective as, when we talked about the metrics, what would that be? How would you think about a regulator role? Yeah.
I think if I may touch on the context, the Kenyan context, there's an opportunity for the government and through the Central Bank of Kenya to collaborate with entities like IPSL, because we've seen in other markets where that sort of collaboration, and by collaboration I mean we've seen the regulators playing not just a catalyst role, but folding their sleeves and being part of the payment system and leading the governance, leading the operations of the payment systems. That's the only way you'll have to subsidize a lot of things that are happening at the payment system level.
So this would be something similar to what they have in Brazil, like PIX?
We have an example within the East African community, like TIPS in Tanzania, where you have the central bank heavily involved, not just tapping and clapping and catalyzing or through moral suasion that you need to do one or two things. I think there's an important role that the central bank can do in working hand in hand with the payment system, and even if it's perhaps going to make this a national payment system, the better, because there's other aspects that the Kenyan economy will feed from, like from the sovereignty of the payment system. With that, there's opportunities for influencing the governance at the payment system, so ensuring that the different participants have a voice, an equal voice, whether big or small, in terms of negotiating various aspects of how the payment system is run, leveraging the scheme rules, There's opportunity also for the regulator to play a critical role in ensuring that both bank and non-bank participants, more of them are, speaking the same language when it comes to how these services are extended. In some markets we've seen, like in Rwanda, where the central bank is smack in the operations of the payment system, we've seen even them go to the extent of branding the payment system in a certain way, and all the other players sit behind the brand. So that pulls away the focus of competing to be in the face of the customer. So it drives the market towards innovation that is critical in delivering on products and services that are really going to be meaningful to the users at the end of the day. Because in as much as we are doing very well in account holdership, whether in the banks or in the mobile money scenario, we still don't have that level of, I would say that we're financially healthy. And you can see that from, even when it comes to products and services. For instance, just the other day we were looking at numbers on the level of indebtedness when it comes to digital credit. 83% of the loans that are being taken, they're not being repaid. Yeah. So there's a problem in that balance of financial health. So if we could, if the regulator could come in and play this role, a lot of the innovation would be taking place behind the scenes, which is what we need at the end of the day. Because like we said, a Jacqueline out there just wants to push money. They don't care about the institutions really.
That's excellent. And on that note, we've totally run out of time. Please join me in thanking my excellent panelists for a really engaging conversation. Thank you very much. Thank you.
Thank you very much, Kituku. Thank you, Jacqueline. Alexis Akwajiram, back to the stage for our final interview with Frank Mwiti, who is the CEO of the Nairobi Securities Exchange. And they're going to be talking a little bit about how to increase market access.
Frank, hi, how are you? Great, good to see you. It's okay. So Frank, welcome, and thank you for rounding off the day. I wanted to start, this is about increasing access, increasing market access. So I wanted to start by getting the other side of the perspective, the other side of the coin from the conversation I had with Esther and M-Pesa when we were talking about retail investors and that being opened up. So you, as the Nairobi Securities Exchange, you've opened this up to multiple mobile money platforms. So I want to get a sense from you as to the impact that you've seen so far.
Thank you, and thank you for having me. Maybe three things I would like to share. The first, of course, is that we have a new strategy at the NSE to guide us for the 2025-2029 period. And our new strategy really was formulated out of the need for us to be relevant to this economy. And the way we approached relevance was that we need to be able to say we are running an exchange that is open and accessible to everybody. The NSE has been in existence for over 70 years. We started off, I wasn't there, but we started off way back as a chapter of the London Stock Exchange during our colonial times. And in many ways, for that 70 years, the exchange has really been an elitist outfit in many ways. And so our view is that going forward, that needs to change. So we crafted a strategy that speaks to that, to be relevant to everybody, to be open, to be available, to be accessible. In doing that, we settled on one of the key enablers to make that happen, which is technology. And so Esther, who was here before, that conversation that we had with them, with Safaricom for that matter, leading up to us collaborating to launch, for example, ZD Trader, was actually born out of the need to enable the general public to access our market.
our strategy actually speaks to mobilizing 9 million retail investors. That's me, that's my mom in the village, that's my brothers and sisters out there.
Is that by 2029?
By 2029, we are definitely hitting that number way before that. And you'll be surprised that when we set out to formulate this strategy, we were told in some quarters that 9 million is impossible, and in other quarters that 9 million is too ambitious. But clearly from what we are seeing, actually that number is a drop in the ocean.
Can you give us some numbers then?
Okay, fair enough, I will. So direct retail investors in our market, we have about 3 million accounts. However, of those 3 million, less than 200,000 are active. Active for us, it doesn't mean dormant. Active means you're trading at least, let's say, 2 times a week. Okay? If you compare that, for example, and it's not a fair comparison, but if you compare that to betting, people are betting probably 10 times a minute. And interestingly, by the way, we have a lot of young people in Kenya that are trading external markets, foreign markets, the US market, Asia, etc. They are very active because we can see the numbers from some of the data that we gather. So but my point is, it started off with us coming up with a strategy to be relevant, formulating a strategy that harnesses technology as one of the ways to open up the market, looking at strategic partnerships that enable us to accelerate that. Safaricom is a good example. And then on top of that, now we are building products that speak to the general public.
What type of products?
A good example is exchange-traded funds. Why? If you're familiar with ETFs, exchange-traded funds, ideally it doesn't require you to have, let me call it technical knowledge. If, say, for example, I want to invest in, I am a believer in, let's say, banks. I can see my good friend Russo is here. So you want to buy KCB, or you want to buy all the other banks that are in this room. Now, in other NSE, we have 11 listed banks. It means if you have an interest in investing in banking, you would have to buy all 11, one by one, as an example. But with a banking ETF, you buy that one ETF, you get exposure to all the banks that are in that basket. It also means you don't have to sit and think, should I buy KCB, should I buy equity, should I buy Diamond Trust, etc. By the way, in some markets, there are more listed ETFs than single shares. So the future of a market like ours has to be structured products like this that enable people to access the market, trade the market, whether it's thematic, whether it's sector, etc., without a lot of friction, at costs that are very affordable.
So thank you for that example. And just to quickly go back to the number, you said 3 million accounts at the moment. Is that since the launch of making it available across mobile money apps, or is this from before?
No. Actually, just to illustrate the point, the last time we had a major IPO at the NSC, before the most recent one, which is the Kenya pipeline, was the Safaricom IPO in 2008, 17 or so years ago. At that time, because that IPO was very well marketed, a huge number of people opened accounts. So when you look at the data, about 1.8 or so million accounts that are part of the 3 million I'm talking about actually were opened in 2008. That's the first time people were really interacting with a market like ours, and I mean the normal mwananchi, the normal, shall I say, the ordinary Kenyan. And then those accounts went dormant. Why? Number one, we've never had a market that really spoke to the retail investors. Number two, we never had another IPO of that magnitude come to our market since 2008. Number three, our tech was a bit dated. Things have changed now. We have a big IPO that, Kenya Pipeline that got listed. And by the way, Kenya Pipeline is the largest IPO across any exchange in Africa in the last decade. So it's big. It was a fully electronic IPO. You didn't need to fill any form. Number 3, it was priced to enable the ordinary Kenyans coming. So the 3 million are born out of the 2008 era. Of course, now with our strategy, we are working to reactivate those accounts. And then, of course, because of tech, mobile phones, etc., the market is easier to come to. If you look at 2008, people required to actually walk into a broker with a form and fill forms. Some of them had to travel to Nairobi from, the rest of the country. Very tough.
So the friction has been removed in terms of the tech, and then there are going to be more IPOs as well, which presumably will drive this.
Yes.
You mentioned gambling. Now, obviously, investing is a way to develop wealth. It's wealth creation. But the flip side of that is, what levels are there in terms of financial literacy? Because people are taking a risk, and they need to be made aware of those risks. So, I mean, is there anything being done around building up that financial literacy?
Yeah, it's a good point you raise. And, it feels like I've been at the NSC for 10 years, but I've actually not finished 2 years. I'm finishing 2 years in May. The reason I mention that is when I was fresh joining the organization, I thought financial literacy is, the cure-all. Having been there for a while now, what I have realized is you need a toolbox with different interventions. Financial literacy is one of them. The market that we admire most is India. India has not gone for financial literacy per se. What they've gone for is your ability to invest in the market without being a technical person. Okay. So you need passive structures. That's why exchange-traded funds are a good example. I just need to say, I want to buy the market. I just buy the top 25 listed companies at the NSE. I don't need to be a CFA, a CPA, etc. So financial literacy in our context starts with awareness, rather than we are trying to get my mom to be a financial analyst. It won't happen, and the ability to do that at scale is very difficult. However, through ZD Trader, the product that we co-launched with Safaricom, there's data that's coming out of it that is actually informing how we will design financial literacy interventions. Number one, in this age of AI, it should be possible for you to, prompt some AI integrated functionality within ZD Trader as an example, or within other trading systems that connect to our market. And that gives you recommendations, not advice, recommendations on how that should go. Number two, the Capital Markets Authority is also working to license robo-advisors, so that for maybe 10 shillings a day, I can use robo-advisor on my phone to tell me what to buy. I don't need to be, again, a certified financial expert. Number three, we are working on in the long term, and I think this is an important point because there is Kenya has a national financial inclusion strategy where the Secretariat is the Central Bank of Kenya, and all the other players, including ourselves, banks, etc., are part of it, that is looking at how can we have financial literacy in the core curriculum. I personally got exposed to matters money and investing in my university. Yeah. It should be the case. Just like you learn maths, you learn English, you learn geography, financial literacy should be part of your, correct. Yeah. So that's the long term. Yeah. But the point I'm trying to say is it's a whole spectrum. There is, of course, actual financial literacy programs we're doing. There is designing products that don't require you to be an expert. There is integrating new technologies like AI to enable that friction to become less. And then, of course, there's the long-term play around including financial literacy and investor education in the national curriculum.
So this is a whole suite of interventions, and particularly taken by the idea of robo-advisors. I think that's fascinating. Just stepping back and taking the big picture view of this then, I'd love to get your take on this. To what extent do you think financial markets, capital markets specifically, can drive economic growth in African countries, in African economies?
Look, it goes without saying that I am absolutely clear that we are the real solution to three things. One, mobilizing domestic and foreign capital to come into the economy for national development as well as for business development. That's obvious, and our market right now has both 50-50 domestic investors and 50% foreign investors. So we already are conduit in that sense. Number two, we are working a lot more closely now with government to support government raise capital through our market. You've seen, for example, the government issuing infrastructure bonds through the recent wave of securitizations. They have been issuing instruments through our market. And the beauty of that is that we are enabling government to actually tap pockets of capital that otherwise they wouldn't either connect with easily or probably not to the scale and quantums that we are able to do. Number three is to bring ideas to capital raisers ourselves, instead of just sitting back and waiting for people to come and issue instruments in our case. I'll give you a good example. Earlier last year, we set up the Sustainable Finance Center of Excellence at the NSC that is meant to help catalyze funding that addresses things like climate change, energy, water, things like this. Why? What we are finding is we have a lot of, particularly foreign investors, the bulk of whom have come from Nordic countries, Scandinavian countries, those sorts of countries, coming to the NSC and saying, we want to invest in sustainability-linked instruments. We need them, of course, rated, we need them listed, we need them structured and governed to global best standards. Why don't you act as a catalyst to enable those instruments to come to market? So we set up the center to intervene on matters origination and structuring of issuers of green bonds and things like this. So we know there is pockets of capital looking to come through the NSC into the economy, and we are, of course, aligned with that. Yeah. But there's also another bit, which is this. Truth be told, a big chunk of our economy is in the hands of SMEs. And SMEs around the world, in Africa in particular, really struggle to access credit. As a result, all those jobs, all those services and goods that could be supported by or delivered through SMEs are, of course, challenged. Yep. So we are also, we've also designed a program specifically to enable SMEs to become listing ready or investor ready or IPO ready. So then they are able to use our markets to raise capital. We've also partnered on that program with development partners, multilaterals, etc., to help de-risk the SMEs, so then they are investable. So it's a whole spectrum of the sort of support they can. But I was going to say, in many ways, I think the capital market has not been necessarily seen as shall I say, it's not been in the kitchen when the economic agenda has been put together. We are seeing that change now, okay? And the credit is due to, for example, the government in Kenya in terms of the policy and regulatory support that is given to capital markets to enable the capital markets now to play the right role. If you think, for example, of all the capital that is sitting with individuals, that is sitting with pension funds, that can be directed through properly governed, structured vehicles listed at the exchange that can then find its way into economic development agenda.
Frank, thank you so much. I mean, we've crashed through the time, so we're going to have to end it there. But the takeaway is you're in the kitchen. Absolutely. Yeah?
And of course, the key takeaway is you need to invest in the NSC. Can I close by doing a plug? 2024, NSC was the best performing exchange in Africa, rated by Morgan Stanley. Last year, NSC was only second to Egypt. We returned 51% dollar terms. What am I saying? if you're not invested at the NSC and just attending conferences, I think you're missing out.
There you go.
Thank you very much.
You heard it here first. Thank you very much.
Thank you very much, Alexis, and thank you, Frank, for expanding the definition of financial inclusion. A big round of applause, everyone, to all the remarkable speakers who contributed to today's really rich program. A heartfelt thank you to all of you for making it out here, many of you coming out here from overseas. Thank you to our journalists, Yinka, Alexis, for really grounding this program in incredible, rich discussion. Thank you to the Gates Foundation, to Invest Kenya, to Arise IIP, and KCB for your partnership. We're really proud of the world-class journalism our team delivers every day. We invite you to continue to follow our work as we cover the most consequential global conversations. If you're not already subscribed to our email briefings, including Semafor Africa, please go to our website, semafor.com. It's free. Please mark your calendars. In September, Next 3 Billion, our flagship edition, returns to New York on the sidelines of the UN General Assembly for the third annual edition, where conversations about Africa, led by Yinka and Alexis, will of course feature prominently. We're serving a little reception next door, a little cocktail for all of our guests, so we invite you to come. But lastly, if I could invite Yinka and Alexis to the stage with all of our remaining speakers for a little photo. Thank you, everyone, and we really appreciate your contributions.